Hello, good afternoon, and welcome to the live trading hour brought to you by the Live Trade Room. What we look to do during the session is to look for high probability trading opportunities across some of the world's largest markets, from foreign exchange to commodities, and also your global indices as well. We'll discuss our trade plan, we'll have a look at the fundamental news developments, anything that's likely to impact perhaps some of our trades. Discuss our trade plan, and then look to execute trades within the time that we're broadcasting. So let's see what opportunities we have for you. So if we can start, as always, with our risk warning currently up on screen. Just take a brief moment to familiarise yourself, of course, with the risks involved in trading these financial markets. Without the assumption of risk, there is no opportunity for reward, but it is something that needs to be, you need to focus quite carefully on. And we have tools and things that can help traders, make sure that you understand how much capital you're committing to a trade. Often when we do when we work with traders, we'll ask certain questions: how much capital you're exposing in any particular trade? And very rarely do we get a fairly accurate response. What we'll often get is, I've exposed 40 pips. Well, there's a big difference between a 40 pip trade with a one lot trade versus 0.1 lot of a trade. The monetary exposure can vary drastically, and that's the problem. Oversizing, trading with too much size, risking too much of your capital in any one trade. All these sorts of things come to the fore, and that's what we spend an awful lot of time discussing with our traders. If you can trade financial markets with a comprehensive understanding of risk, and you look to mitigate risk, especially when you're starting out in this environment, what that means is you can be in the markets long enough to learn how to trade them, and therein lies your ability to be successful over the medium and longer term. Okay then, so let's get into it then. Let's begin, as we always do. Every time we get to a trading desk, we want to make sure we understand and we're mindful of market moving news, just to see how that might impact perhaps some of our trades. And for more information about what we offer and how we can help traders become consistently profitable over time, you can just go to a website there, thelivetraderoom.com, for more information. And we do offer membership for as little as $15 US a month. So hopefully you'll find that on the affordable end. Okay, so without further ado, let's bring up FOREX Factory, and it's just an observation really. We do have G7, so there are a number of themes being discussed over the next 3 days. So let's see what comes out of that. We're unlikely to get any significant clarity between now and the close of play. So we will. There's a number of issues which there is concerns about. So I'm sure we'll have a better snapshot in terms of how the G7 are going to move forward in a whole variety of different areas, for corporate tax to vaccine rollout to aid for G7 to support those countries that are really struggling, and a whole variety of other different reasons. So we do have the G7. It's not regarded as a major news event, but we might get some very interesting price moves early next week off the back of it, as markets try to align themselves with perhaps agenda moving forward. We've had the BOE governor speaking today. We'll have a look at the pound now in just a second. There's more information there if you want to kind of read up on it.
Just in a quick sound test there, seeing cable trading 141.56, euro US dollar trading 121.35.
We've got our Squawk service on, so I'm sure we get some little market updates. So we've got something really quite interesting in these markets, something that's occurring, and really it's going back to yesterday's core CPI data. So if I just scroll up a little bit further, we had the ECB, of course, very much keeping things as is. the CPI figure, so we were expecting 0.5 and 0.4, and we saw a significant uptick on the CPI reading. Now the problem with that is it creates this inflation environment, and what we would expect is it's an unexpected inflation story. So the forecast is much less and the reality is much higher. So that's a bit of a concern for the Fed. And this is why we've got a little bit of a problem with these markets, because we've got counterintuitive trading conditions. So to try and explain it as easily as best we possibly can, the Fed and the ECB are at pains to say that any kind of inflation's transitory, that there's no major concern. The problem with inflation, obviously the price of everything is going up. That puts an economy in a state of kind of overheating, and one of the major vehicles that a central bank can use to offset that is increasing interest rates. And with everyone's debt load, debt repayments are quite affordable right now. Money's really cheap, but once that begins to change and prices start to go up, the debt burden can become very, very significant, and therein lies some of the difficulties. So to just summarize, we're seeing an uptick in inflation figures, in CPI figures out of the US. We all know that there is this backdrop of increasing prices across a whole range of commodities. As a result of COVID as well, we seem to be paying an awful lot more for a whole variety of different products and services outside of, what's being the CPI index. So there's this structural issue where we've got almost markets that are not really making as much sense as we would like them to. So with that surprising uptick in inflation, we would expect actually stock markets to be under a little bit of pressure. We'd expect the bond yields to be pushing higher. And we're seeing the exact opposite. We're seeing bond yields actually soften really quite considerably. We're retracing, the vast majority of the move that we've seen.
Boris Johnson's schedule ahead of the start of the G7 today. Italian Prime Minister Mario Draghi has set to meet him at 1:15 today, and he is the first of the EU leaders here at the G7 to sit down with Boris Johnson, according to Tom Newton-Dunn of The Sun.
Okay, so we'll just get these little market updates around the G7 meetings. So just to clarify, we've got this lowering 10-year bond rate in bond yield in the US, which is actually helping prices push higher. So if I just bring over the charts. And the bond yield has moved from 1.75 there probably a month or two ago, and now we're down at 1.44. So a significant reversal. And what we would expect to see is, if we're looking at the bond yield, we'd expect the stock markets to be pushing higher, and that's kind of what we're seeing. The problem is we've got this inflation story that the market seems to be ignoring, and how significant that very well may be. We shall, of course, kind of have to wait and see, really. But to make things a little bit more confusing, and I appreciate, current market conditions are a little bit confusing because we do have risk-on market conditions where markets are pushing higher.
Until the top of the hour, the Bank of Russia Governor Nabili.
Okay, I'll come back to that. Just the fact that the stock markets are pushing higher, so we've got capital moving towards risk. What we're also seeing at the same time is the dollar strengthening. So the gold is pushing to the downside, and we're seeing the US dollar strengthen pretty much across most markets against you can see the up and down nature of these markets, but nonetheless, we are seeing dollar strength. Sorry, I don't know why this is just pausing a little second. We're seeing dollar strength across these markets now. A really strong bounce to the upside in the dollar Swiss. If I look at it on the daily time frame. So we are seeing that sort of aggressive dollar price action. The pound is weakening, and the euro dollar is also weakening as well. And in fact, the euro dollar is in a very, very interesting position. I don't know why this is pausing the way that it is, but so this is a clearly defined. We've been talking about this market and what's been happening with this market for a little while now. Been in a bit of an uptrend. We kind of pulled back. We've failed to make a new high. What we're creating instead is a new low. We've seen this recent high, and yesterday we were really looking for a sell, which completely reversed, and now it looks like we're getting that impulsive move to the downside. But it's based on a dollar strength trade, which doesn't quite stack up for us because the equity markets are pushing to the upside, and we trade multi-asset classes so that we can understand the market conditions and understand the correlations between different asset classes, and we're not getting those match up to any great extent. So we're seeing the dollar strengthen, we're seeing the equity markets push to the upside, and we're seeing bond yields tick lower, and that's creating a bit of a skewed market condition. So any trading we do today is purely based off technicals. The fundamental and the sentiment backdrop is a bit strange. It's a bit weird. So I hope that makes sense. Technically, we're getting opportunities. The fundamentals not quite stacking up, and certainly the sentiment is a bit wishy-washy as well. So what we generally like to do when we trade financial markets is to get the fundamentals, the sentiment, and all the technicals, moving in the same direction, whether it's to the upside. We like strong fundamentals. We like nice positive news reports, and we like to see a series of higher highs, breakout trades in that direction. We like to get all of this together. And if we add them all up, we're left with let's jump in to these markets. I suppose just to clarify where we currently are at with these markets is a situation where, if I just get perhaps an amber color. So we're left with a bit of a question mark on the sentiment, and a question mark as well on the fundamentals. So are we now really eager to be jumping into these markets? You'd have to say technically, whether this is up to the upside or to the downside, depending on which market it is, the opportunities are likely to exist. What we probably will do is look for some technical opportunities and look to be really quite aggressive with them until we find out, I suppose, until we sort of wait until the fundamentals are a little bit more supportive of the price action. So I appreciate it's a bit confusing because that is the nature of these markets at the moment. We're seeing a lot of sort of the price action in the euro dollar over the last 2 days has been absolutely rubbish, pushing higher, looking to break out above that 122.00 level, and then reversing. And then yesterday we saw a breakdown to the 121.30 and a really strong reversal back to the upside. So it's been really sort of poor quality price action. And today now we're getting the flush trade to the downside. Again, largely technical. And we had some spikes yesterday in yesterday's market and things like that. So it looks like we're seeing the dollar strength that we've been talking about for the last few days, but we haven't really had the follow through to any great extent. What we want to see now in this session is whether we get that follow through if we start breaking these quite important levels to the downside, then that could be some decent opportunities. See, there's a lot of resistance just above these highs in the dollar CAD. The dollar Swiss, we can certainly see if this market breaks above the 89.71 level. The dollar yen, what we can't really excuse me, let me do that again. What we can't really move away from is the price action over the course of this week has been sideways moving, and we're seeing that across most of these markets. There's your consolidation in the pound dollar. So really the euro dollar is probably giving us one of the better opportunities. There's your sideways moving pattern in the dollar Swiss. Dollar CAD is pretty tight range. We would like the Aussie dollar below the 77.18 level, and the New Zealand dollar perhaps is a little bit closer to flushing lower below that 71.60 level. So we could look at the euro dollar, the New Zealand dollar for those opportunities. So let's take a quick look at this. So we'll see if we get a little breakout move in these markets in favor of that dollar strength. So let's see if we have that opportunity or not. The euro pound, we're seeing the pound actually strengthen quite considerably. So we are actually technically getting that little breakout to the downside. So we do have a couple of areas of potential support just in at these areas. So we're going to be running into that. But we can certainly look at the euro pound as well. So that's the euro pound. We'll come back to that in just a moment. We've really got some European weakness, and that's really probably more of the focus. We have the pound strengthening against the yen and the dollar strengthening against the yen. So actually the actual trade to focus on is the euro dollar to the downside, so we've already got that captured. We had been looking for some upside price action in gold, which is this little sideways moving pattern here. Crude oil, let's see. Crude oil to the upside. Above, we were looking at this market today, and we just poked its head above it, and then, as you can see, just kind of rolled over to the downside. So as far as consolidation is concerned, we've kind of been in this zone now for pretty much 3 days. Yesterday we had it looked like we were going to get a strong correction in this market, and kind of we failed to just close a little bit lower. Or to make that move a little bit further to the downside. The S&P 500, we're at the second highest price in all time, so we're just grinding our way to the upside, as you can see in these markets. We're just sort of in a fairly tight range within a lot of this price action. Long periods of moving sideways. Yesterday's kind of reversal back down to this level is quite interesting because there's a lot of resistance up here at the monthly highs. Now technically we are above it, so above the 42.50 level, we might get an accelerated move to the upside. Now, as long as the bond yields are squeezing lower, which is exactly what's happening, it's really quite supportive for the stock markets. The problem is they're completely and utterly ignoring the downside that inflation is very likely to have. They're basically relying on the Fed to step in if things get a bit more difficult, and putting a lot of trust and faith in the Fed, I think, is probably where we're at the moment. And when we see markets that behave like this, we do sort of question the viability of the trade. We're seeing all of these markets tick higher, as you can see. The DAX, just we're in this drifting phase, where we're just moving sideways. So we're in this pretty tight little range. So really we're needing to see little breakouts in these markets. And there's this sort of bearish bias really in Bitcoin. Although the last 2 or 3 days have been mildly positive, we're still in this pretty tight range. It's a significant range from a monetary perspective, but it's a very small range when you're looking at something like Bitcoin. So we're sort of range bound between 39 and 33. It was quite interesting 3 days ago for this market to reject the lows and to reverse back above that $33,000 level. So let's put together these markets. We'll see where the opportunities lie. We'll see if we can execute trades in those. So we were talking about the euro dollar to the downside, the New Zealand dollar. Yeah, let's definitely look at the euro pound. So that euro weakness looks like to be the trade of choice at the moment. We'll see if we get a little bit of a pullback maybe to get into a trade like that. Actually, gold is selling off quite significantly to the downside. We've got New Zealand down here. Right, let's look at the S&P just to keep an eye on, not necessarily to be buying it at this price, but if we broke above the 42.50, you see the problem is with the equities pushing higher, it does put the dollar under a bit of pressure, and we quite often see that that's the case. But we're seeing these markets trade in a counterintuitive direction, and therein lies some of the difficulties. Crude oil. Let's have a quick look at crude oil. So this is our trade plan for the session. These are the markets that we're going to certainly focus our attentions on. Last night we were left with these sort of mixed market signals. We were looking for the commodities to actually push to the upside. Gold is the market that's quite close to that. We really like this market here below the 85.80, so we'll get into that and have a quick look at it if we possibly can. Okay, and just looking at some of these markets off screen as well. Okay, so let's see then. Let's go into these and we'll see if we can get the euro dollar to tick lower. Let's see where the opportunities lie. Right, so this is a fairly sort of linear move. So straight away, some of the problems that we have is stop loss placement. If we look at getting into 21, 24, we have a stop loss all the way up here. This technically is the place that we would need to place the stop loss. You're talking about a 70 pip. 70 pip stop loss on a trade like that. So when we trade, we want to trade a profitable risk reward, and if we're risking 70 pips on the trade, are we likely to see 140 pips to the downside from here? It would be really unlikely, and we want to assess probability. We want to assess it as best we can. There is a 50 period moving average just approximately 30 pips further to the downside. So do we want to risk 70 pips to benefit from a 30 pip gain? That doesn't really make any sense for us. So sometimes the opportunity exists, but the quality of the setup is really poor. And that's what we're currently seeing in the euro dollar. You know, a lot of traders will be looking to buy it up at these levels. In fact, there's probably a clear-cut breakout to the upside, and we've had a complete rejection of this level. So, and that's only for now. That's the current state of play. It's like catching a falling knife from here. You know, yes, it might move another 100 pips to the downside, but you know, we've been trading these markets long enough, and we very well may get what we will be waiting for is a pullback opportunity in a market like this. So if it just keeps flushing lower, like I said, we can't really jump into a falling market, because more often than not, you just get slammed out of it straight away. So what we can do is be nice and patient, wait for these opportunities, and wait for a coherent pullback. And then what you can do is you can look to get in on the pullback opportunity, or the breakout, whatever the case may be. And then you've got a clearly defined stop loss, which is probably closer to sort of 20 or maybe 30 pip break. So sometimes the opportunities are not fantastic for us. Just looking across some of these dollar markets, like the price action, it is absolutely rubbish. over the last number of weeks. Whoops, excuse me. So we're in very much range-bound trading markets. We're seeing that little flush trading in New Zealand dollar. We've got the same situation with the, this is just, in fact, it just shows you the quality of the setup is a really poor one. So at this point here, this market was actually, you know, pushing to the upside, and then a complete linear pullback, and we're continuing to move to the downside. So we're moving from 7200, let's say, to 7155. So a 45 pip move in this market, which is quite significant. What we've been talking a little bit about recently is the fact that this market has been in kind of a sideways range now for, we can probably say, 5 days. We've been in this little up and down little range, and now we're just breaking to the upside, and we've kind of reversed that trend to the downside. Yeah, so we're looking at about 50 pip swing, and putting that into context, because pip ranges can vary from market to market, and it can be significant in some markets and it can be absolutely nothing in others. So one thing that you can use is, and you can see the volatility across a lot of these markets with an ATR, a 20-period ATR, we're at significant lows. So if you add up the range over the last 20 days, you can see a high to low range of 65 pips. But this move here is sort of 50-55. So we've basically done the whole range for a trading day within a very short period of time, and in very much a straight line. So what can we do with that is the key. Here's your previous level of support. Let me zoom out and see if I've got something slightly better to work with. Quality of the opportunity is just not great at all. I don't know why our chart is not responding like it normally does. So what we'll do is, what we would like to see in this market as well is this market just pull back to previous support, which now becomes resistance. And look to catch the next leg to the downside. This move here, generally speaking, is really poor quality price action. And it is more of a toss of a coin in terms of what happens from here. And what we like to do is make decisions around support and resistance. I don't know why this pull. I think the broadcast is stalling a little bit as well. This is just horrible price action. Let's have a look at the euro pound. Like, we are really just splitting hairs. This market's been in a sideways move for quite some time. Now we're getting that little breakout to the downside. Again, you're looking at a sizable stop loss in this market. So looking around this 86.05, we're now down at the 85.70. There's an opportunity for a little pullback at 85.82. That would be something that we would contemplate getting in to the downside, and we'd then have perhaps a 30 pip stop loss on a sell trade. So if we get a bit of a pullback in this market, we can certainly look for this further to the downside. So let's amend this. Pullback sell trade, except the level at which we're looking to get in is the 85. Yeah, it's the 85.80. So that's the level that we've spoke about an awful lot. So if we can get in around that little bit of price action, so it's only sort of a 10 pip pullback really. Hi Finbar, good afternoon. Hope you're well. Are you in anything at the moment, I wonder? And you did well with that gold buy trade from yesterday, so I hope you were able to book in some money on that, because as you can see, it kind of rolled over to the downside now. So that 1900 is a kind of a strong level of resistance. So I think you booked in profit just below that level, which was I hope you did anyway. So let's take a look. So we got a pullback sell trade below that 85.80 level. Instead of below, let's put it around. Brilliant. So you took a small profit. Fantastic. In 4 trades now. Brilliant. Were they all in the gold market, I wonder? Oh, okay. So in the Aussie CAD, the Euro Pound, the Dollar Yen, and the Pound Swiss. Okay, so a variety of different markets there. Yeah, really good work. I know you're a bit more. You like those little sort of scalping, sort of swing trades, intraday stuff. So yeah, with these markets that are pretty range bound at the moment, they're by far the more successful type trades. Funny enough, they were red all week, and now they are green. Good stuff. At least you can book in profit when they start turning into profitable trades there. So look, we can see the New Zealand dollar just continuing to roll further to the downside. So the euro dollar, we're actually awaiting a pullback. The New Zealand dollar, we're awaiting a pullback. The euro pound, it's just extending. So there is an opportunity if we get a pullback to this level. And it looks like it's just dropping like a stone right now. And again, we've got bullish stock markets. So some of this price action is a little bit counterintuitive for the dollar to strengthen, but for markets to be in a risk-on market phase with lower yields and increasing inflation. So the whole sort of fundamentals behind these markets are a little bit skewed. It's not to say that you can't trade them technically, but like I said, we look to get the fundamentals, the sentiment and the technicals in some sort of coherent, to be supportive of one another. And these are just not the conditions that are suitable for that right now. So unfortunately, we're kind of waiting for a constructive pullback in both of these markets. So unfortunately, we're in a phase where we need a constructive pullback. Maybe we might get one in the euro pound for an opportunity to sell around 85.80. These markets aren't really cooperating to any massive extent, certainly over the last week or two. And that's the problem with trading sideways moving markets. It's always really important to determine what type of trader you are, what opportunities you look for, instead of throwing your trading strategy out the window to make other concessions like reduce trade size, work with bigger stop losses. Those types of things are all very workable, especially if you're a kind of a momentum and breakout traders and swing traders like we are. A lot of the consolidation is really, really tight, and it's a little bit more intraday, i.e. on smaller time frames. So all those conditions don't really tick many boxes for us in the way that we trade. So for us, it's a little bit more about a little bit of patience. And if we get in, try to work with slightly larger stop losses, and still making sure that we don't risk more capital. So it's not about increasing your trade size. It's about control of the risk, and that's what consolidated markets mean. So hopefully we'll get breakouts of these levels in the not too distant future, and hopefully these markets early next week the correlation will start to fall into place. Yeah, Nokia, in terms of a stock, it's not a stock that I kind of monitor or have a look at. I'll have a look now. Yeah, it's on a bit of an uptick, isn't it? So we're at sort of yearly highs. Let's see over the 5-year. So it's definitely coming off its lows. What are we, 4.5? So I suppose I wouldn't be able to I wouldn't be able to sort of say an awful lot about the fundamentals behind Nokia at all. But technically speaking, we're kind of moving sideways over the last week. So maybe a breakout further to the upside soon might be an opportunity. These prices are really, if you think we're at sort of, what are we at, sort of €3 a trade in February time. Now we're 4.5, so there's already been a 50% increase in Nokia. And the problem is with trading stocks and shares is you need to have an understanding of how the company operates and what it does and how it does it, and the management team. And it's not trading like we do here. There's a lot more to investing, and of course you're probably looking to trade it as well. So you can trade it technically like we do with all of these charts, except trading stocks technically is kind of a different animal altogether. It's more for sort of pension purposes and looking to invest, and you can get caught up in really sort of wild swings. And a lot of these markets, all these meme stocks, they're all sort of flying in all sorts of different directions, and just there's a lot to sort of trading stocks. There's a lot more to it. We can do very snapshot kind of fundamental analysis on most of these markets, and we can see how they correlate with one another. An individual stock has its own sort of ecosystem of things that can impact it, and the price will react accordingly. Now, don't get me wrong, there's a lot of your Reddit traders and things like that. They're buying stocks because someone told them to, or they're buying and trading in stocks because someone told them to. That is never really a viable basis for you to be making sound financial decisions. The reality of it is they may be right, they may be wrong. You're probably better off going into a casino and putting your money on red or black. It's that kind of gambling nature of financial trading and investing. And we like to know and understand what we're doing and why we're doing it. But it's more of a if you've got a longer term bias in something like Nokia, and you think they're perhaps bringing out the next iPhone in a year's time, or there's some other influence, or they're getting involved in other industries, or whatever the case may be, or you know they're being bought out by someone, or whatever the case may be, all of these influences, the management team, they've just I noticed as well, is it AMC? They've taken some of senior management from Amazon. You know, all of that is really quite supportive, and I appreciate they've taken a bit of a hit, I think, in the last week or so. But all of these things come to the fore when you're trading stocks. Although there is technical traders of stocks, but you've got to be able to cherry pick and choose what you want, and it's kind of its own environment. So, look, I digress. Hope that was useful. We might be getting close to getting a little bit of a pullback shortly in the euro pound, perhaps to capitalize on a bit of an impulsive move to the downside, where you could still place your stop above that 8600 level, so maybe like a 20-25 pip stop loss in the euro pound. And let's see if we get something constructive in the euro dollar to the downside, and also the New Zealand dollar to the downside. The Aussie, we're not quite there yet. It would be below the 77.12, or the 77.17. Okay, it's not too far. It's only 10 pips away, so that might be worth looking at. What concerns us really is the S&P pushing higher. That's counterintuitive for our dollar sell trades. So I'm going to leave it up to you guys as to whether you decide to pull the trigger or not. We might end up packing up a little bit earlier based on these market conditions. So we'll see how we get on. We'll certainly monitor things for the next hour or so. So listen, guys, we do need to end this broadcast. So on that slightly disappointing note for the week, I shall let you go and wish you a lovely weekend. Hope you do enjoy the weekend, make the most of it, and we'll be back again live through YouTube at 12:30 every day. And hopefully next week we'll have some new stimulus that are likely to push markets in certain directions, and we kind of get out of this kind of sideways moving patterns. We do want explosive markets with volatility and momentum, and we're just not really getting that. We're getting that little sideways pattern, which is a little bit painful for us in the way that we trade. So next week, there's always another week, so we'll see how we get on then. So look, from everyone here, thanks very much for joining us. Take care, have a great weekend, and we'll be back again on Monday. Bye for now.